Coffee time, BRB. Yeah. All right, good morning. How are you? Hello, hello, hello. How are ya? How's your mum? 209, baby. FX Street and NFP. All right. Let's get going. How are you? Why don't we start while I do a disclaimer? Why don't you say where in the world that you are from? I'm going to use this disclaimer just since I have it. There it is. Welcome to Trade Non-Farm Payrolls Live, a collaboration between FX Street, Investor Bootcamp / Traders Way / Investor Bootcamp / Quantbox / TradeBloods.ai. Hey man, I'm an entrepreneur. I got a lot going on. I'm a complicated person. But anyways, a collab that has been going for more than 17 and a half years. That's longer than Nike and Michael Jordan and Spike Lee. Anyways, let me remind you that trading is risky, not appropriate for everyone. Your past performance. You should see this coffee. It's so good. Look, I'm a master trader. Yeah. Your past performance, good or bad, is not necessarily indicative of future results. Please stay small, stay humble, focus on the long term. Never risk money, cannot afford to lose. I guess I can say hi this way. Hey, good morning. How are you? Oh, that is hot. Anyways, hey, we got an important day today, but I don't care what the headline is. So what do I care about? Norway, USA, Norway, twice. Mario. Joburg, all right, yeah. Nigeria, Ethiopia. Wow, lots of Africans, huh? Yeah, I got to get back to the continent. It's been a while. Been a minute, as they say in America. Vietnam, man, I would love to go to Vietnam. Love to go to Vietnam. Yeah. India. I love India. I miss India. I've been all over central and northern India. Time for me to head south, maybe. Qatar? Yeah, Adam. Yeah, I got to visit you out there, huh? That'd be a good time. South Africa. Yeah. Right on. Yeah, South Africa's great. Miami. Good morning, JGB. So anyways, yeah, what do you want to do today? Well, we're going to do, by the way, do I look pretty for you? Huh? What do you think? Not bad? Not bad? All right. Me. So what do you want to do today? Like I was saying, I don't think that the headline number is that important unless, of course, it's significantly different from the expectation. So if it comes out 120, okay, that's interesting. Or 80, that'd be interesting. Or if it comes out 325, okay, that would be interesting. But probably, as in probabilities of that are pretty low. So what do I care about? Artem from the Ukraine. I got this watch from the Ukraine. I had it smuggled out, Artem. Took 2 weeks just to get it to Kiev. And took 3 weeks to get it out of Kiev. So I saved it from the war. Nice. Yeah, it is actually, yeah, anyways, it's not a watch show. If it was a watch show, I think you'd be very interested. It's a very, very interesting watch. But anyways, I got it from the Ukraine about a month or 2 ago, 2 months ago. Anyways, yeah, so I don't really care about the headline unless it's way off from expectations, and it's not likely to be way off from the trend. So what do I care about? Oh, now we got a watch show. This is, I'll take it off. Let's see if I can do it with the, that's going to reflect, isn't it? Yeah, I'll turn it off. Let's see if it'll zoom in properly. No, it's not going to zoom in, huh? Huh? There we go. That's beautiful, though. Can you see it? Anyways, it's Omega. It's cool, man. Cool watch. Yeah, no, it's totally cool. So it's just over 100 years old. I have a brand new Omega band on it. If you can see that. I don't know. See, it's a watch show now, right? Brand new Omega band. Oh, I guess that's upside down. So anyway, so it's got the proper band on it, which is difficult because it's a big watch. But yeah, it's just over 100 years old. That's why I had it saved. And you're like, Wayne, pocket watches are not 100 years old. No, it's actually a pocket watch. And so there's a custom-made case, right? You see how thick it is? Custom-made case, that's the original crown, which is cool. Oh, original crown. I put it on, right? You can see it. Original crown from the pocket watch. And then I bought a brand new band. So it's cool. Anyways, cool. All right. So anyways, so what do we expect? Adam is wage growth. Exactly. So we're going to look at hourly earnings, that kind of stuff, because we're looking at the question we're trying to decide as economists is, is there a wage price spiral? That's what the Fed cares about, right? So CPI is coming down, PCE is not coming down. So we're kind of stuck there. We can go through some stats. You should know all this stuff. I'm going to assume you know all this stuff, but you might not know all this stuff. So we'll go over some data. And then what we'll do is we'll analyze the market and pick some, resistance and support areas, and probably watch NFP fluctuate between those. Cool. So that's kind of the goal there for today. Let me move the screen. Oh, wrong one. Hang on. Relax. You get so angry. All right, cool. So I guess we could, let me go through the groups I'm associated with, and then we'll move on.com. I work at tradersway.com. Don't worry, I don't earn a referral fee or something like that. So I just think they're a trustworthy, ethical foreign exchange broker. The Swiss National Bank lied to the whole world, and the markets moved thousands of pips in 1 minute. And a few very large brokers went out of business that day because they were trading against their clients, and Traders Way was perfectly fine. And I contacted them. How come? I'm like, you're a small firm. You're a boutique firm. Like, how is it that you're okay and these giant ones went out of business? And they're like, well, we don't trade against our clients. We actually enter the trades into the interbanking system. I'm like, holy crap, that's amazing. You actually do what you say you're going to do. So anyways, they earn my loyalty and respect. I think you should try a demo account if you can. I have this new service, by the way, and it's free. This is a new service. How would you like a second opinion on every trade you make for free? Second opinion. You can do stock markets, Forex. I know we have like hundreds of Forex pairs. Unnecessary, of course, but I've paid for the data. We do futures now, like gold and silver. Oil coming soon, but let's just say getting the data is more complicated. And we have some crypto assets. And so what you do is you just post a trade plan, super easy, and you instantly get feedback, personalized feedback about your trade plan, and we send it to you via email. We don't post it on the website, and no one's going to see it and all that kind of stuff. It's just personally to you. And it's free. And you will be amazed. Like, there is no joke that you'll get like a 5 or 6 or 7 paragraph email, and you'll get 3 different trade plans, short, medium, and long term. You know, beautiful images and everything. Like, you will be amazed, and it's totally for free. We'll go through this later, but I want you to try it. Tradeplans.ai. Again, so how does a demo account work? A demo account works where you go, it's like going to the driving range and hitting 1,000 slices in a row. Well, you've perfected how to golf poorly. So a demo account could be dangerous. Remember, the government tells you past performance does not predict future results. So just firing off a bunch of trades on a demo account may not actually make you a better trader. So imagine you decided to use your demo account, and you thought about it, and you did the best you could developing a trade plan on your demo account, and then you fire off your demo account trade. Then you post that, so take a screenshot, post it to tradeplans.ai and get a second opinion, and it's like a personal coach that will give you feedback on your trading idea now. And it's free. It's like asking me, hey, Wayne, what do you think about this trade plan I just developed? Well, I can tell you. It's ridiculously amazing. You really honestly should try it. Now, I've spent a lot of money on it, but you should try it. We'll use QuantBox. This is, I'll use this later today as well, but this is just a service that I own that automates your macroeconomic research. Pretty easy, pretty simple. Okay. And then, of course, Investor Bootcamp. You might know me from FX Bootcamp. I've rebranded it Investor Bootcamp because we tackle new subjects now. For example, yes, there's central banking stuff in there, day trading and swing trading, sure. But there's courses on macroeconomics, oil fundamentals, so on and so forth. I'm going to do some on personal finance. We're going to do one on hedge funds. We're going to do one on real estate, gold, stock indices. So we're just bigger and better because our community is bigger and better than only Forex. So anyways, that's where we've expanded. So let me just pull this up because we're going to use this later, I'm sure. In fact, why don't we start with this? So we're interested in inflation today, right? Even though this is a jobs report, we're interested in inflation. Okay. So one thing that we can do here, well, I guess really quickly I should look at this. Hang on. Let me open this up. Let's just get her done. Does this fit on your screen? Yeah, it's pretty close. All right. All right. So let's go full screen. That should, no, it's a little off for you. Let me see if I can adjust this for you. Hang on. Celia, you just go to investorbootcamp.com. Okay, there we go. That's a little better, right? All right. So anyways, so this is all real time right now. Gold is still not working. There's been a bug, and we've been working for 2 weeks trying to get rid of this bug. We're just not, a data provider is not providing us with updated data. So anyways, yield on the 10-year T-note way down. It says 0.00. Well, that's because we're measuring today. But right now, holy smokes, we were at 4.3, and then we're at 4.15, and the 10-year T-note is falling. People are buying the 10-year T-note. That's great. Very cool. So yields are coming down. That favors my, I actually have a bond strategy that I'm in, and I make more money on the way down in yields than up. So yeah, this coming down benefits me, and that makes me happy. Oil, look at this, on the way to 85. Oh man, I've had about 4 trades on oil this week, and long, of course. And the sad thing is, I would do really well up and up and up and up and up, and then flash crash down, take me out at break even. And then it would resume up and up and up and up, and I'd be back on it again, and then flash crash. I'd be making money for 16 hours a row, and on the 17th, it drops $1.50, just enough to take me out. And so I've had to rinse and repeat multiple times, and I keep getting knocked out at break even because, I'm risk averse. And I don't like that high volatility. And it's just, I've tried so many times this week, and I just haven't been able to hang on for 8 seconds because the bull is angry. It's an angry bull. So, oh man, I'm frustrated with that. I was long at 78 something, and then 80.5, I think. And then I tried again one other, anyways. So sad, right? Tears in my eyes. We're way up on 4,500. Excellent. And no major pullback yet. Euro dollar on its way back to 110, but flat in the moment. And Bitcoin, having a bad day, Bitcoin. So we zoom out and take a look at the medium and longer term. And medium term has gone risk on, but monthly is risk off. So we're mixed now, and then mixed medium and long term. So it might be turning risk on. We'll see how NFP goes. If NFP goes, like I said, maybe a little less wage growth, or maybe unemployment ticks up a little bit, all of which is doubtful. But if it goes that way, this will probably start to rotate next week. So right now, in the medium term, long Aussie, long Euro, long CAD, long Kiwi, long gold, long S&P 500, short Swiss franc, short yen, short dollar. But today, in the moment, it's flat. Now, how do we get to that conclusion? Well, the VIX is down over the week. S&P 500 is up. Dixie is flat. Yields are down on the 10-year T-note. Okay, Japanese futures and gold are all combining together to get us that slight bullish phase. Okay, now this is in the moment, so we're actually looking at market sentiment amongst institutional investors. That's in the moment, like literally watching VIX and the yield, the change on the 10-year T-note, right? So we're watching yields and volatility, and we get it out of there. But then you can also pair your long versus, strong versus weak, bullish versus bearish by looking at the commitment of traders report, or you can track the flow. So this is the position. And institutional investors are 76.2% long euro, and institutional investors are, significantly short, 76.89% the yen. So you would think, in the long run, long euro yen, strongest versus weak, right? But then you can also change the flow. You can trade the flow. And a lot of money is going into the 10-year T-note, which would indicate yields coming down. And they have dramatically this week. Well, this is showing the actual flow of contracts by institutional investors. Not only did they buy, they got out of their shorts. So money literally, bears became bulls, yields came down, and we knew that. Okay? And then, of course, money rolling into the pound and euro still. Now, what about changes short? Okay, big shorts on euro, and check this out. Big shorts on gold. Gold, but I'm long gold and making money. Look how awesome gold is. Yeah, but actually money is flowing out of the bulls, so we've lost 6,000 bulls, and we have 12,000 new bears. But you know what? That fits in something that we call seasonality. So we go over and we can look at the 20-year and 5-year average flow for gold. And you can see gold has a good month in the month of August. And it did. And I'm making money on gold. So thank you very much. So you can see from this June, July, August period, you should look to buy gold. And I did. And everything's right as rain right now. But then check this out. there's typically a flow, typically meaning the 20-year average and the 5-year average looks like we go from peak to valley in this period in September. So sometime in September, you would expect money start to come out of gold. And check this out. Like I said, we have less bulls and more bears. Oh, snap, right on schedule. So it tells me, since we're actually tracking the flow of money in and out of gold, but we also have a predictive tool that tells us what typically happens over 20 years. So we knew it before it happened, and now we can confirm it's happening. Okay? Isn't that neat? Yeah, pretty cool. So anyways, taking a look, oil's done really good in, this week, up 5.95%. Now, the thing is, I tried so hard to buy that, and I was just never able to hang on. I'm also long S&P 500. That worked good. Well, in my stock portfolio, I'm actually long everything. But anyways, Aussie dollar up, Kiwi dollar up. Very cool. Aussie yen up, Aussie CAD yen up. Okay, all of that is also seasonal. Yields coming down on the 10-year T-note. That's really good. And, well, the Rand is trying. Okay, cool. Bitcoin, even though despite all the volatility, like it's down 4.7% today, but guess what? It's flat for the week. Many dollar pairs are basically flat to slightly up. And that's good because I didn't trade the dollar much this week because we had, oh my God, we had so much news this week, and we still have news yet to come today. So I'm not ready to sell the dollar, but I'm waiting to sell the dollar. But I have been selling Japanese yen, and it's been good to me. Thank you. Thank you, BOJ. Right now, retail is heavily long. Well, I guess we could just say heavily short the Swiss franc, because retail's heavily long Kiwi Swiss franc, pound Swiss franc, euro Swiss franc, Aussie Swiss franc, CAD Swiss franc, USD Swiss franc. They've been underperforming, but the interesting thing about this, that might actually change. But what history has told us is as soon as these retail traders are going to probably give up, and they'll finally switch to short, but then it'll actually start to work, which is terrible. So we might want to look at all the Swissy pairs. Swissy has been strong, and yet retail's been selling it. And what they probably don't know is Swissy will likely weaken, and right, and then this will start to work, but they'll probably bail. Okay. Cool. A lot of stuff in the middle. Just what you want to look is the difference between retail trading and institutional, and you'll see there's quite a difference. Okay. And of course, week over week, you want to see the change, you know. And what I think is, so institutional traders, 59% are short. So it's technically a bearish asset. But I think it's going to become more bearish soon. So this will go from 0.59 to, let's say, 0.7. From 0.6 to 0.7. And that would push these up. But like I said, history shows, it's a tragedy. But now that, everyone's long, they'll probably bail on it. Cool. So we are interested in jobs, right? So here's the job market going back to 1991, and we're looking at, the entire world. And this way you can do comparative analysis of how different economies are doing. Okay, Switzerland and Japan, very, 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 very low unemployment. The United States, very, very, very low unemployment. New Zealand, very, very low unemployment. And then it gets ugly. UK over 4%. Australia about 4%. Canada 5.5%. Euro area 6.5%. Whoa, whoa, whoa. Wowzer. So half these countries are trying to get unemployment down, and the other actually want, like Japan, Switzerland, but in particular the United States, we want ours to actually creep back up. Well, to be fully accurate, actually that's not the goal. The goal is to have wages come down. It'd be great if everyone kept their job but made 5% less. That would bring inflation down. But nobody wants to be the one to have their salary cut by 5%. So what will likely happen is next year, you're going to lose money in your house. Or we go into recession, the stock market comes down, and you're going to lose money in the stock market. You got to lose money somehow. So the Fed is hoping it's controlled through wages. Okay, and now you can also see the trend. Okay, look at the trend here. So if we go back to, let's go 2013. Okay, wowzer. Look at these unemployment rates, huh? Canada had 7% unemployment. Wow, that's crazy. What about COVID related? Euro area, 8% unemployment. Canada, 10%. This is like running into COVID, right? Let's go back to here. So Canada went from 5.5 to 10, like in 6 months. Wow. So pre-COVID, Euro area 8, Canada 6, Australia 5, UK 4, New Zealand 4, US 4, Switzerland 5, and Japan 2.5. And wow, they're just craziness now, huh? Switzerland just, wow, 1.9. So we want to see these changes, and in particular, we want to see in the United States. Oh, I don't get my only button. Oh, there it is. No only button. I can't click it. All right, let's go exclude, exclude, exclude. Now notice, isn't this cool? So QuantBox isn't a website, it's a database. You see how I'm manipulating things? We're actually just logged into the Google Cloud. Yeah, it's very cool, right? So anyway, so I'm manipulating the data. So anyway, so what we want to see today actually is this goes back to 3.6. We actually want unemployment up because it would probably bring wages down, and falling wages would reduce consumption. A reduction in consumption would likely reduce inflation. In particular, super core PCE deflator. Okay, so the trend is down and we need to stabilize this. Okay, you can see the trend. The red line is just a smooth line, and the trend is unemployment falling, falling, falling. And like I said, that normally that sounds good, and that would be good information. Well, I'm going to watch the time. Normally that's good. The thing is we have inflation. And so with less and less people available in the workforce, companies have to pay more and more, and wages are sticky. So in that type of inflation tends to stay around a long time, and therefore that pushes up inflation, which then creates a spiral. So there's something called the wage price spiral. So everyone makes a lot of money, so therefore demand for everything goes up, which we call aggregate demand. Because aggregate demand goes up, then prices go up, and therefore you need to demand more wages, which means you buy more stuff, which means demand is high, which means prices go up, which means you demand more money at work, and all of a sudden it's out of control. And the only way to bring everything back down to earth is have 10 or 20% of your workforce get fired. That'll bring wages down. Okay? And so what we care about is this inflation level, right? I wouldn't be trading USD yen this time of year, Ellie. I was on it a couple of weeks ago, and now I'm off. But if I have been long, but I wouldn't do it anymore. It doesn't make sense seasonally. Okay, I mean it depends on how today goes. Okay, Ollie, if we have a bad NFP, meaning a high number or less unemployment, so unemployment falls or wages go up or the headline number is big, then it'd be back to long dollar yen. Okay? But what you're suggesting now without that information is unseasonal. It wouldn't make sense. Okay? So anyway, so here's global inflation around the world broken down by major currencies. And right now, the world is improving. Okay? Things are getting better. But they're not perfect. The UK is still in trouble. Okay? The United States is doing all right. But obviously, we want that number down. Canada is slightly higher inflation than the United States, but that kind of makes sense. And then euro, though, 5, right? In the UK, like euro's 5.5-ish, pound is 7-ish, like 5.5 and 7. Yet Japan is 3, which they're actually happy with. Look at the inflation level in Switzerland. Yeah. Crazy. But pre-COVID, of course, let's go to pre-COVID. The UK was at 0.6. Then it went to 11 and is now at 7, but it was less than 1%. Like, wowzer, huh? If we add some more time to this, you can see how out of whack some of this is historically. Okay? And how bad things were here. Look at this, huh? Japan, 23% inflation. But let's pick on the UK and see how Aussie, Great British Pound. There we go. Things have not been this bad in the UK for a very long time, huh? So this needs to come down. I mean, look, this was horrible here. So this needs to get down to at least 3%. Now, inflation's not bad if you're productive, right? So if there's 5% inflation, but you make 10% more money, then you're still actually better off. So you don't want to look at it, you have to put everything into context. So we can go back and take a look at the UK and look at their GDP. Okay? And this goes all the way back to 1960. But let's just go to modern era, UK modern era. Let's go to 2011. I'll just pick one. And, well, I guess what would the average be? Close to 2% GDP. And we're now at 0 and potentially falling. So let me put this in a context. The UK has outrageous levels of inflation historically, and really likely in the real world, negative GDP. That is bad. Bad. Wow. But that means as long as GDP is positive, and that's 0.2, which is laughable, but what the UK government is saying is not negative. Okay, as long as the economy isn't negative, then the Bank of England can continue to raise interest rates until it goes negative. So they can jack up interest rates at least a couple more times. And if GDP stays positive, they can continue raising and they can fight that inflation. But if GDP goes negative, then they're stuck between a rock and a hard place. They have inflation, but they can't raise interest rates. But as long as they can raise interest rates, it's not a good economy, but that higher yield, in particular if the Fed is perceived as pausing or stopping, hitting terminal rate, then money could flow into the UK for the higher yield. Okay? So hopefully all that makes sense. What I care about is really the hourly. Okay, so NFP coming out soon, in fact. Do I care about the participation rate? Not really. Right, the headline number, 170 versus 187. Yeah, if it comes out 150 or lower, super awesome. The stock market will rally, the yens will rally, and the dollar will weaken. If it comes out 225, stock market's going to have a bad day. It'll be risk off. And so what we want to look, or the other thing that we obviously want to watch is the unemployment rate. If it goes to 3.6, the stock market's going to rally. It's bad news, right? People lost their job. Great. Stock market's going to rally, dollar will weaken, yen will weaken. Okay? So we want to watch that kind of stuff as well. Okay? But this is the one that I think is most important. 0.2 would be ideal. Actually, 0 would be awesome. Negative is unthinkable, but if this is, I think, the most important thing we have to watch for. If this comes out negative, wages are falling. Holy smokes. Because then we go from 0.4 down to 0.3. So if it's like 0.2, 0.1, or even negative, the stock market's going to rally, the dollar's going to get weak, the yen is going to get weak, the Swissie's going to get weak, CAD will go long, Aussie will go long, pound will go long, euro will go long, gold will go up, Bitcoin will go up, oil will go up, silver will go up. Did I miss anything? But I don't think the headline number is that important unless we're way off expectations. Huh? Cool. Was that some good prep? Did that set the tables? I'm ready to do some technical analysis. Did you click the thumbs up button and thank FXstreet for being such wonderful hosts? This is the 209th version of this one webinar I've been doing with FXstreet. Been doing this one webinar. I've done other webinars for FXstreet, but just this one we've done for every month for 17 and a half years. So thank you to FXstreet for being wonderful hosts. So make sure you give them a thumbs up. Okay? Make sure you click the old likey. Just out of, being an honorable and respectful person. Okay? Yeah. Did you guys post a trade plan yet? What I'm going to do later today is I'm going to go through the trade plans and give you feedback. If you want me to review your trade plan, maybe you're going to set something up for next week. I will review your trade plan later today after the news comes out. Oh, look at that. My watch is on upside down. I'm like, what the hell? I can't even. Oh, yeah. If you post a trade plan, it is free. I will go through it. It will be anonymous. Your name will not be attached to your trade plan. And I will give you feedback on your trade plan for free. And we'll use it as a way for me to teach you some technical analysis. So I'll go through your chart. We won't know who you are, but I'll go through your charts and I'll critique them and I'll give you feedback and then I'll tell you if I agree or disagree. Okay? So we'll come back to this later, but while we're waiting, you might as well post your trade plan and make it like, what do you think is going to happen on Monday or all of next week or maybe the entire month of September? I'll give you feedback, but our AI, his name is Aiden. You'll get instant feedback from Aiden, but I'll go through it later live during the webinar, and I'll also give you feedback myself. Personal feedback by a human, and you'll also get feedback from Aiden. Because you get it? Because he's aiding you. He's aiding traders. His name is Aiden. A-I, Aiden. A-I-D-E-N. Aiden. Oh, look at that. My neighbors are having a sculling race on the lake. I need a skull now. Oh, my God. It's pretty funny. Okay. Grind says, yeah, the market gives me all the feedback I need. All right. Okay. I don't know. I don't know what you're saying there. Are you using tradeplans.ai or no? Okay. 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 Cool. So anyways, yeah. Oh, okay. Yeah, the market tells you everything you need. All right. Yeah, I guess you don't want to use a free service to give you a second opinion. I mean, dude, seriously. How do you join up? InvestorBootcamp.com. Let me just post that. So, Grind, I've known you a long time. Nothing is free. Well, actually, right now it is free. There's no advertising. There's no promotion. There's no fee. I don't even have anything. I don't even have the capability right now to even charge you a fee. There's no monetization at all. I haven't sent it, right? There's no newsletter with advertising. There's literally no monetization, Grind, but I have spent thousands and thousands and thousands and thousands and thousands of dollars. Anyways, so I think you should try it. You'll like the feedback. It's not going to hurt you to try it. But anywho, all right. So this is short term. Yen is strong right now. Wah, wah, wah. Dollar's strong right now. Wah, wah, wah. This is all going into NFP, obviously. So money is coming out of the market. It's not necessarily strength. It's that yen shorts are gone and dollar shorts are gone. So we can look at longer term indices, and longer term, dollar might be rolling down, which is expected. Yen might continue down, which is expected. Okay. Swissy's been very strong. Typically, you'd think it would roll over soon. And I don't know, I might be reading too much into it. So you might want to if you're trying to split hairs here, you're like, well, if we get lower than that low, okay, that would get interesting. And then it would be definitely bearish if it got lower than that low. So that will probably take all next week, maybe a couple of weeks. Gloves for socks. You've been out of the market for 9 months now because you're afraid of a crash. Yeah. well, gloves for socks, this idea afraid of a crash, that tells me you're not informed. So your thoughts on physical items? Well, if you have a high inflation, I suppose you want to buy a physical asset because your cash is trash in a time of inflation. But your physical items, you're buying antiques. I don't know your income and stuff based on that. Like, it doesn't produce income. So I guess you're buying antiques and then flipping them, or buying antiques and holding them for a future date. You could buy a 2-year treasury that pays you 5% a year. You see what I mean? Oh, you wouldn't save money in a bank. No, you need to be an investor. So I have an account where I have 40% less volatility than the stock market. Okay. And I earn about 10% income a year on average, but I still have upside potential if the stock market, I mean, look, the stock market is likely to come down. It always comes down at some point. But in the next 20 or 30 years, I believe in the stock market and that it will, the S&P 500 20 years from now will be higher than 5,000. So yeah, I wouldn't have money in a bank because what does the bank do? Invests it. See, in economics, you put your money in a bank, we call it savings, but savings is equal to investment. Because if you don't invest it in the market, the bank will do it on your behalf. It solves the asymmetric information problem. How do you, let me says, hey, how do you see this? Oh, it's a tool I have installed. Okay. So anyways, so if you don't invest in someone else, now you're investing into an asset. So you convert your savings into investment. Now your investment is an asset, but I hold financial assets. So like my A is A to the alpha because it earns income. Now the value of your antiques go up and down. You probably don't see them as clearly as I see the portfolio going up and down because I get repriced every time. You don't know the selling price of your antique. Will you make 10% on it or 5%? Will you lose money on your antique? Those are questions we don't know. Well, my investments get repriced every minute, so I always know the net asset value. But I have net asset value plus income. So now I'm earning 10% a year and getting paid for it, where your asset, it just sits on the shelf and collects dust. So I would do what I'm doing. Okay. Now you're worried about a crash. That okay, worrying is not a problem, but you need to be more informed, right? Okay. Like afraid or exuberant. They're emotions, not. I don't know. You need to, yeah. Being afraid and out of the market, right? Oh, I see what you're saying, Grind. That's fine. But anyways, going back to that gloves, it's just like afraid and out of the market is not the best solution, right? Well, no, but you are out of the market. You are afraid. Yeah, but it's okay. Anyways, we'll move on. We can talk about it later. We're about 4 minutes away. Who's going to post the number when it comes out? Who's going to do it for us? Okay, thank you. Okay, who's going to post? hourly earnings. Yeah, Gloves, it's just like, I want you to be informed and make better decisions than just out. That's all. That's all I'm saying. For example, I have similar worries, but I've structured and constructed a portfolio to protect me from the downside and still earned income. You see? Like, you're afraid? Well, hedge your position. Okay? There was a time recently where I was triple leveraged short as a hedge. Now I have, option strategies to hedge. I'm in the market, but I've limited my downside as much as possible so that I can survive it and be in the market, so that my money becomes an antique like you're collecting, but it's growing. All right, so someone posts the headline, but somebody posts hourly earnings, hourly wages, right? Wage growth. Okay. And I also need to know the unemployment rate. Is it 3.6? That would be great. Are wages flat or down? Is it 0.2? That would be great. Is the headline 180? That would be great too. Okay? So if we could each have somebody post those, that would be appreciated. Ali wants to know how to become a professional trader. Start with your education. Invest in yourself. Investor Bootcamp is $88 a year, and it's like 100 hours long. I mean, it's ridiculously affordable. Yeah, thank you to FX Street. Again, if you like my style, check me out at investorbootcamp.com. We're about 30 seconds away. Again, places to find me. I do education for Traders Way clients. I have an AI service that will give you feedback and train you on how to trade properly using technical analysis. I have a fundamental analysis service that automates macroeconomics for you. And I have an education service. It's $88 for 100 hours of education. So, thank you for being here. Thank you to FX Street for being the host again. And I got my pretty tie on for you today. It's bright, huh? Remember, if you post a trade plan on tradeplans.ai, I'm going to review it in like a half an hour. And no coffee stains. That's true, Jim. It's still early in the day. But there's little dots that match the shirt, so it's pretty. It's orange, but it's tied in. Yeah, sharp, sharp. So, yeah, yeah, $88, right? Yeah. Okay. $1.87. That's okay. Hourly earnings 0.2. 3.8. Oh, it's good. It's good. All right. Headline number is a little high, but everything else is golden. So let's take a look. Stock market's probably going to do well. Let's go to take a look at the S&P 500. I would think up. Oh, yeah, if it's up, it's stuck. Look at that. Look at that. Good, good. So my entry is here. Okay. And we're up. Yep, we're up. So the target for me on the S&P 500 is right there. We're on our way to 4,600, maybe 4,700 in the next couple of weeks. Maybe next week we hit 4,700. Yay me! So that's really good. Good job, America. People are losing their jobs. Actually, it's not true. People are adding jobs, but people have entered the workforce. Okay, JOLTS is down. NFP is higher than expected, but it's the earnings that's doing it, and it's the unemployment rate. Good, good, good. Okay, so I said that would be up. I said gold would be up. Okay, I'm long down at this bottom. And gold is up, as I said. What else? We said Bitcoin would be up, I said. Let's drop into a smaller time frame so we can see it because the moves have been so big. Okay, it's trying. Not much of a move there. I said oil would be up. There's your oil. Oh, we're right through my target and everything. Like, oh my God. Look at, we went from 618 to 1382 and beyond. Son of a, because I tried 3 or 4 times to stay in that trade and I just couldn't get it to stick. I'm too conservative. Take a look at some yen pairs. Actually, let me see what I'm on. Look at that, I got 800 pips. Go, baby, go! Go! 800 pips, let's go! Okay, so what do I got? I have some yen, but they're newer. Aussie yen is an older one. We can do Aussie. Let's go to Aussie. Aussie. Let's do an Aussie yen, and then maybe we'll look at Aussie dollar. Just to pick on one. Okay, this should be turning north, you stink. The plan is, so we have a double bottom formed at 94. Target is 95.5. Okay, so that's based on the 4H. Today's target, however, is way up there at 95. So today's day trade is buy it at 94. Take profit at 95, and then maybe on Monday we buy a dip at 94.80 and take it up to 96. Now that hasn't been set yet, but maybe on a weekly basis it'll look better. So why don't we do that? I'm going to open this up and do, instead of daily, let's do weekly so we can see next week's trade plan. Okay, so this week's trade plan is buy it at 93, take it to 94.60, I think it is. You see how we hit the target? Then we came back, and now we're reloading in next week's green zone. So next week's target is right here. Okay, so this week, okay, this week's trade plan was buy here, exit there. You can see bullish profit zone aggressive, profit target conservative. So it's all listed. So we hit the target and it came down, and now we're in the new buy zone, and this is next week's target, you see? Cool. So if we get follow through, that's where we're going. Very nice. Ooh, some of the other ones are behaving poorly. Oh, I see. I forgot I was on this one. I'm going to bail on that quickly. Only because Swiss franc, remember? And the dollar yen. Remember I was talking about you don't want to be long, you don't want to be trading dollar yen anymore. CAD had bad numbers, huh? Let me get out of that. Oh my God. CAD had bad numbers? Okay, I'll get out of that before it hurts. All right, so anywho, you don't want to be long Swissy in a risk on moment because remember how I showed you and it was very, very, very strong? And I said, well, I'm watching and waiting for it to roll back over because that's seasonally. So anyway, so this might be the thing that now weakens the Swiss franc. So anyways, you don't want to be long Swiss franc. You want to be short Swiss franc. Therefore, you don't want to be trading Swiss franc yen. Now, it was very bullish, and now technically it's not. So I just bailed on a small loss because I don't want to be in it. And I'm not afraid of losses. Euro should be good. No, remember I said long euro. Remember that? So this is on a 5er, but we could be building this. So we might have to scalp our way up or wait for Monday to be able to buy this because we need to recover here, and then we need to bounce here, and then we need to rally up and maybe even do this one. So we need to get up to this point. Okay. Then we need a new floor off of this point. Then we need a higher high, which is this. And then come back and there. And finally, this is probably the move in which you go long. And on a 15-minute chart, I would expect that to be like Monday on New York. Okay. Because it's tricky, because it's not bullish now. You're only anticipating a bullish change in trend. Okay? So we're still in recovery mode, but I wouldn't get too excited yet. But that is a good number. That NFP number was quite good. Let's look at dollar pairs. Look at this. I'm going to move my stop to break even. Whoa, dude. So I caught that. Snap, I caught that. That's my plan B. You don't understand. I waited for a day and a half for that setup. I waited for a day and a half for my plan B. And it came down and tickled it and missed it. Tickled it and missed it. Tickled it and missed it. Finally caught it. And then, pa-chow! NFP took it north. Sweet. Can't lose money. Drag it across. And I'm probably going to try to use that as support for maybe on Monday. We'll see what happens. But it's going to be a lot like the Euro Yen where, you know, this is what I'm thinking. Okay? But look at this. I had it all planned out. Let me go out to a 15-minute chart. It's all planned out. I never got an entry for plan A. It was a plan, but I never got an entry. So plan B, I have an entry. I still don't know if it'll work. And I know what I want to do if it drops down to plan C. So we'll see if there's follow through. I don't know what's going to happen anymore, but I'm in and I can't lose money. So it's a good start. Okay. But I imagine there's going to be a lot of volatility because people are going to be confused. They're like, the headline number was higher than expected. That's bad, right? No, but that's not what you should be looking at. It's below 200. It's on average. It's about right. It'll probably be revised down. But the other stuff, the hourly earnings and stuff was great. So we could take a look at this trade. This one took a while to get in as well. I'm going to move my stop just below the lowest low, because we're going into a sell zone. But again, this trade has taken days to set up. And now there's my entry. So like that would be my stop. But I'm going to put my stop lower than that. Okay. So where am I at now? 850 pips. Yeah, boy. Cool. Cool. Nice. Sweet. Euro dollar we did, right? Did we do this one? Yeah, we did this one. This is a different version of the same thing. It's just, I was teaching people on two different methods to do the same thing. This is a Leonardo Fibonacci 618. And so the target next week, not only based on pivot points, is 110, but based on Fibonacci is also 110. 618 predicts a 1382. Okay. But I'm a swing trader, so I want more than that. So my target is actually here. So I'll be in it for more than a day. I'll probably be in it. Well, let's change the analysis. Biased pivot points. I'm bullish, and oh, that is weekly. Ooh. So I might be in it for more than that. So let's do monthly. Hit them and hit them hard. Let's go. So yeah, you can see that's my monthly target. In fact, actually, let me double check thing. I think I don't have my conservative on there. Yeah, let me put my conservative target. Okay. Okay. All right. So based on pivot points, okay, which is now superseding Fibonacci, but they're similar. Okay. We're going to get a move kind of like this, and then we're going to go up, and the current target is somewhere between 111 and let's just call it 112. Okay, for the month of September. Now, I have some alpha. My alpha says I can actually go higher than that. Now, normally I wouldn't, but this time I can. So for that, I have to change my template, and I'll show you my ultimate target for the month of September. And by the way, predicted back in January. So let's do that. Let's do monthly. And R3 is actually 113, and this is actually my target for September. So I'm just going to move that now. Well, I won't move that now. I'll just show you the logic. Typically, in a typical month, like let's just pick May or something. In May or June, my target's going to be right below the monthly target because I want to get out before I hit it and collapse. So I want to make sure I'm executed, right? So anyway, so right now my target is 333 pips. Okay. Just below 112. But this is not a typical month. And so if everything works out, actually 113 is the real target. So the most aggressive target. So a normal month would look like this to this. Okay. And then maybe this if it's aggressive. But then I think this month it could do that and then reverse. Okay. Okay. So anyways, that's what's going through my brain. Somebody wants gold. We can do gold. Let's do commodities. We'll go into the gold. Or do you want to do all metals? I guess we can do all metals. Let's just do all metals. Okay. Cool. So let's do here. And try to use some of the same logic. So I was bearish for gold on gold for how many months? 6 months, a year? Maybe a year? I mean, look, if you've been to any of the other NFPs, I've told you for a year I've been selling gold. And then we have this down, the up, sell, down, 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 up, sell, down, 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 down. Hit target. This gray area is support. Okay. Double bottom, higher high, higher low. Why did I buy it if I've been a bear all year? If I've been a bear all year, January, bear, February, bear, March, bear, April, bear, May, bear, June, bear, July, bear, August, bear. This is the third week in August. How many people here can confirm in January, I said in the third week of August, gold would go up, the S&P 500 would go up, so on and so forth. How many people back in January? Not that somewhere around August, but the third week. I actually did a special event. I charged $10 for people to attend. $10. I went through the entire year. I specifically said in the third week of August, I would become bullish. We have 1, 2, 3, 4, 5, 6. 6 people confirmed. That's it. So my point here is that if I can do that, then the information is available. Okay, 2 more people have confirmed. The information is available. A, I told you, but B, either I'm a witch, and it could be, or the information is out there. It's available. It's logic. It's intelligence. And if you're like shocked that I can tell you, what is that, 36 weeks ago? Or a warlock. I like witch better. Hey, I can be a witch if I want to, if that's what I identify with, Jim. I can do whatever I want. Right. So look at, I teach this stuff. So yes, I'm an educator, but I actually use this stuff. But the thing is, the information is there. I can show it to you. I provide it to you. I give it to you. I teach it to you. I have services. If you're like, I don't want the education, I just want the information, I have that. It costs $80 a month. And now you know this stuff 36 weeks in advance. Like, why do you fight me? Oh, well, he flies in a private jet because I pay $80 to have my macroeconomic research automated for me. That's how you think? You don't think like, if you hired a quant to work for you at a hedge fund, it would cost $275,000 a year. So like $80 or $800 a year is ridiculous. $800 a year versus $300,000. But you're like, I don't want it because I don't want to pay the $800 because he's just going to drive around in a yellow Lamborghini with my $800 and, yeah. Well, then you do you. But what I'm trying to say is this is logic and intelligence. And if you're going to be a professional trader, you can't trade by the seat of your pants. You need to be informed. You need to start trading like an institutional investor, which means patience, discipline, research, analysis, strategy, all before you even open up your charts. So more than 10 people now have confirmed. Yeah, cool, right? And by the way, I'm starting a mastermind group. We're going to turn $50,000 into $1 million. And then I'm gonna buy a yacht, and I'm gonna have girls in bikinis, and I'm gonna drink I'm gonna pour champagne in my hot tub, and then you'll love me. Girls looking hot wearing less than bikinis. Yeah. Yeah, whatever. Cool. So anyways, gold is up. Where are we now? Still 850. Cool. 20 pips. Mario got 20. Okay. 20 pips though, bro. It's a good start, but you need to let your winners run, my friend. All right. So how are we doing on silver? How's slippery silver doing? Okay. Happy New Way. Happy New Way. He wants to join. Well, let me rain on your parade. It's going to cost you nearly $5,000. But I'll teach you advanced hedge fund strategies and portfolio construction techniques. Yeah. But it's going to cost you at least about $5,000. And you're like, I do, right? You're like, forget it then. Oh, cool. Is that right, Anthony? I love Public Enemy. Oh my God. Cool. All right. Oh, so Mario took someone else said who said works like, oh, Andrew said, yeah, the NFP strategy. Is that right? Anthony, you're in Hong Kong, aren't you? Am I remembering that right? You're like, no, I'm in Cleveland. Oh, you're like, well, you know, the new Hong Kong, the one in Ohio. So anyway, silver having its pullback. No, Florida. Yeah. Oh, okay. Yeah, yeah. Cool. Well, I think in March we're going to do a meeting in Florida. I was going to do a cruise with everybody, but I can't find a cruise at that time. So I think we'll just meet up in Miami. Or I'd like to do like, let's meet up at the Breakers in West Palm Beach. If we do Miami, it'll probably be the Ritz-Carlton. But I think it's quiet and lonely out there. So I think I'd rather do the Breakers. Corey wants to know, do I have a website? Start here. It's $88. It's $88. Yeah. So anyways, what we want to do is always look left. Okay. So ideally, silver does a little dipsy-do. Wow, it didn't draw. What's going on? There we go. Maybe this does a little dipsy-do. Okay. Maybe you want to scalp this. Let's move over to a scalping template. Let's do some scalping maybe, huh? And yeah, you can see right now our support lines are right in here. And you've already missed it. Cool. It's already gone, Bubba. Okay, there's a current high, there's a current low. Oh, yeah, thank you. Thank you, Lewis, yeah. All right. All right, so we're going to do technical analysis soon. Please post your trade plans for review. Remember, it's anonymous. Nobody's going to see your name. No one's going to see your email address. There's no account identification at all. Please post your trade plan here. It'll just take you seconds. All you need is a screenshot. So, for example, if you're going to trade silver, okay, even if you don't have screenshot software, right? Watch. Save a picture as a chart. Okay. And you save it here. So I have one for screenshots. So watch this. I'll label it so you can see it. NFP. And it's a ping. Cool. So I could do this. I can go to tradeplans.ai. Where am I? Oh, I got to open this. Okay, I could go to tradeplans.ai, and my trade plan could be, okay, so I'm doing futures. It's silver. Okay, I'm going to scalp it long. Oops, let's do it this way. Let me do a new one. Let's update this because I didn't have any detail. So we're going to do up, down, up, down, and up. Okay, cool. So now what you do is you click on this and go save as a picture, active chart, 800 by 600, okay. Boom. I'm going to save it. I'm going to just rename the old one that I had. Where's my NFP? Oh, well, we'll have to just rename this NFP 2. Okay, great. Boom. All right. So there's our trade plan. That's the image, right? So what am I doing? I'm buying. I can't even see that. Where am I buying? I'm buying at 24.55. Okay, let's do that. So, oops, where's my trade plan website? Okay, so I'm going to buy it at 24.55. Target 25.55. Stop 23.8. 0. Oops. 80. Good enough. Choose my file. And I go to my screen. Oops, wrong one. Where's my screenshots? Okay, screenshots. And then well, apparently I have a lot of screenshots. So I got to find the one for today. Where's the silver one? NFP. Amazing. Didn't know I had this many in here. Oh yeah, here we go. NFP2, right? And that's it. And I hit submit. Cool. Okay, that's it. Cool. So in my history on this account, oh, did it not post? Interesting. What happened there? We have this, but it didn't post the new one, huh? Strange. I'll have to check that out. Should have been there. Anyways, I guess we might as well just get going. We'll do it. All right, let's just start. All right. Cool. So now we are doing giving you feedback on your trade plans. All right, so this was posted a few minutes ago, actually before the news. All right, cool. So we are Forex selling euro dollar. So let's take a look at the euro dollar idea. I'll clear this out. And we have a lower low. Oops, I have the wrong tool. There we go. Okay, a lower low relative to this old support. Okay, so the idea here for this trader is that they're thinking down like this. So double top, lower low, lower high. Sell it in that zone that they've marked and take it down? Yes, I agree with that analysis. That's cool. So I agree. Job well done. All right, gold, selling gold. All right, let's take a look. All right, all over the place. Now, I already know seasonally, I showed you seasonally that it often comes this way, but it hasn't begun post. Remember, this was before the news. All right, so before the news, well, no, I think it's too early. Although they're saying 1950, we're not quite to 1950 yet, are we? What time frame? 4 hour. Right? I mean, look, you're going to need, I think before you start doing a reversal, you should have a double top. So it could happen in there. Okay, it could happen in there. But I think that's too early. Because, you know, it's just as valid if it does this. You see? So I'm more like, I feel like that's the right idea. I don't disagree with it technically. I don't disagree with it fundamentally. But I think it's early. So that's the technical part. So I think it's good analysis, but it's too early. I don't know what this ABCD Gartley nonsense is, but I'll leave it to you. I'm just going to disagree. It's a good setup, but I think it's early. Okay, selling gold. Another one. What time frame? I don't know what time frame this is, so I'm a little naked here. Let's take a look. figure. So they're scalpers. It's almost a grid. Okay, up, 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 up. My problem with this one is that we never got lower than that low. And then here's the high side test. So I would say, and again, I don't know what the time frame is, but nonetheless, we've had a higher high, higher low, higher high, and never actually broke through this. So once again, like, I don't disagree with it fundamentally, but there's a lot of guesswork. That looks like betting to me. And remember, I'm long in making money on this, so I'm not just talking it. I'm actually doing it. So I'm going to disagree with that. There's no caution to that. So, yeah. So that might work next week. Okay, let's take a look. British pound, US dollar. Okay, up. Okay, I agree in principle with long pound, short USD. I don't see. I'm going to have to check the entry price on this plan. Well, it's the wrong chart. They posted pound but said euro. So 108. Yeah, so it's the wrong chart. So I can't provide feedback, but yeah. Euro dollar. Okay, selling euro dollar. So risk off. I guess these are daily pivots. Risk off, huh? Well, we have a low, which is marked, and we have a high, which is marked. So now I think this would go up, but I'm trying to look at it technically, right? So what are they doing here? They're looking this way and this way. So selling lower highs is what they're trying to do. So you would mark this as support, which would be future resistance. So that would work. Yeah, that would work for a bit. Now, I actually want this to go up. So, but I can see if I was a bear, I'd take it down. If I was being a bull, I'll show you how I look at it, right? I'm looking at it like I'm going to let it fall and then I'm going to try to do this. But it may not happen. So they have it fibbed up from a bullish point of view. I think that's what they want to do. So I'm okay with it. I mean, I don't agree with it fundamentally, but technically it's okay if you're a bear. Now I'm a bull, and so I would actually trade against them. But nonetheless, I think their logic of selling lower lows and lower highs is perfectly fine. Okay. All right, this person, okay. All right, 5 minutes scalp. Let's double check. Buying pound. Okay. Yeah, if I was doing this, for sure, I would look for, so as soon as you have a higher high, the first thing that I do is I look left, I grab it across. So I would be long 2670 if you were scalping. What are they doing? 2670, right? 12670. Entry 12670. Yeah. Okay. Yeah. I would do that. Gold. Selling. More gold selling. Okay. Again, seasonally, that makes sense. Let's take a look at what they're doing. Nice charts. I like this. All right. So what do we got? Talk to me, Goose. All right. Let's do some price action here. Up, 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 down, down, buy. Up, 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 down, down, buy. How do I know that's a buy, by the way? Let's do a quick lesson. It's simple price action, bruh. All right. Okay. So you take this old resistance, you drag it across. This is now my new buying zone. Okay, cool. So let's go back. So down, buy. Okay, now I don't do all this scalping stuff. Okay. Then we have a new higher high. Okay. So I'm going to look left, drag that across. And generally speaking, until things change, oops, let's do black again. Until things change, I'm going to be a buyer. Now it's falling on this chart. I just wouldn't be selling. I'm looking to buy later. I'd probably buy it around 1930. Okay. And so it's a good chart. There's lots of I like, but this, I don't like it at all. This scalping strategy, I don't think their entries are going to be that good, and I don't think they're accumulating much income. If I was me, let me talk about this before let me vote that I disagree, and then let's come back to this, what I'd rather do. So I'm going to disagree. Oh, lots of people disagree with it. All right, let's go with this. What I would teach you to do, or teach, let's say I was mentoring this trader. Okay, I would buy it, I would buy it, I would buy it, okay, I would buy it. So at least because it's trending, that's all, okay? And you can see the buyer, or I should say the trader, the scalper, has buying on here. What I would do if I was mentoring this person is get rid of the sells and accumulate a position until it technically collapses, and then you exit, let's say 1925. I'd accumulate positions and then exit on reversals. This buying and selling looks like nonsense to me. Anyways, I don't know how they're actually trading that. That's probably just an EA giving them suggestions. I don't think they're actually doing it, but this looks like a horrible car accident. Cool. Did you post a trade plan for me to review? Please post one. I'm going to keep going. Remember, it's anonymous. I'll refresh and see if there's any new ones. No, really? Or is it not working? No, it should be working, 1921, but I posted one and it didn't come up. Let me try again. Futures, asset, silver, buy. What was it, 2650? I'm just going from memory. Hopefully I don't screw it up. Target. Was it 2650? I can't remember. Can anybody read this? 2450. Okay, let's do it that way. So I'm going to put the chart in. Okay, 2450, 2380. No, target 2450, 2550, 2550, and stop 2380. Got the picture there. Silver, buy, boom. There we go. All right, so there's my trade plan. So it glitched on the first version. All right, cool. So that's my trade plan. You see, it doesn't say anything. It's just about me. It's just buying. And when I click on it, it's beautiful full screen. I didn't use any snipping software or anything. I just used MT4. And it's in my history. There we go. So now I can see if you agree or not. So I posted one a month ago. And, you know, that day I got 5 people that agreed. Well, all right. No one wants feedback. Okay, well, I'll just keep going. No, Georgie, I want you to do it, but I can show you. I already have the feedback. I don't have my Gmail open. Hang on, I guess I'll have to do it here. Oh, good. We have a new one. Cool. You see how it updated live? That's cool. So let me check that in a second. Mail.google.com. That's not the right Gmail account. Probably, nope, not that one either. Probably my FX Bootcamp account. Here it is. Yes. So I can show you. I did get an email. I'm just going to show you. Right? It's a real, look at, I mean, it's real feedback. Like, it's crazy. And it happened instantly. Like, it's legitimate. So I'm not going to read it to you. You should just do your own, and you will be blown away. So anyways, this is updating in real time. So people are posting. So I appreciate that. I don't even have to refresh the page. It does it automatically. So anyways, let's go through this one. So this person is buying euro dollar 108. Let's take a look. Oh, tiny. Tiny. Okay. Tiny. 108, higher high, higher low, roll reversal, 108. I'd like to see a little more. ATR is okay. MACD with those settings? Okay. So I don't like the MACD. I don't even know how it's helping here. Because actually, I'd look at the MACD and say it almost disagrees. Like, I don't know what this MACD is supposed to be doing. But nonetheless, let's take a look of what this person's trade plan is. Higher high. Let's do this in white. It might be easier to see. Okay, higher high, higher low, roll reversal, drag it across, entry, long and gone. Yeah, this doesn't mean anything to me, and I don't know what this ATR is telling me. In particular, this is a 4-hour chart. Okay, well, maybe the ATR is helping you pick the bottom of the day. Yeah, okay, generally speaking, I'm good with that. So let me vote with agree. Let's do this one here because that's a new one. Hang on, I gotta zoom back down to normal. All right, so let's do this one now. Oh, buying Aussie dollar. Okay. I don't, so there might be some China play going on this trade because they're trying to develop stimulus. So connect this bottom, connect this bottom. They're going this way. Okay, the challenge, of course, is the reverse fibs. So there's going to be something here. And so 382, 50%, 618. Yeah, so that all makes sense the way they've drawn this. So it's pretty accurate. Up, down, up, down, up, down, up. Okay, that makes sense. M2 to M4, I agree with that. With the roll reversal for an add-on. Yeah. I think this is well thought out. You need the continued Chinese stimulus, and you need the continued USD weakness because of the Fed being closer to terminal rate. That's what today means. So on the backdrop of today's new news, yeah, I would agree with that. Technically and fundamentally seems, but you need a few things. You need the US to continue on course, and you need some stimulus out of China. So I agree with that. Okay, let's take a look at this. Buying euro dollar, 187.56, 194. Ooh, a nice big trade. Let's take a look. It's a, I can't see the bottom. Is this a monthly? Yeah, it looks like it's a monthly. But it's a rolling monthly? No. M1, S2. Oh, no, it's not monthly. This must be daily. Yeah, this is daily. Okay, I'm already done for today kind of thing. I'm interested in next week. So it's a good trade plan, I guess, right? Down. Okay, the news event. Yeah, there's a lot of bears. Oops. There's a lot of bears in this zone here. Because we know they're going to trade a double top like this, all right? Yeah, you could try it. You could try it. It's almost like I feel like it could do this. Of course, I'm not watching the market, so I don't know what it's doing right now. But you could have the up, and then it can come down Monday, and then Tuesday, Wednesday. So it doesn't have to go down this way. This is why I'm like, ooh, it's just a day trade. But would you try this? Yeah. Yeah, I think that's fine. That's fair. Trying to see, like, what is all this over here? This doesn't look right. So this is a central. This is an M2. Okay, so M2 to M4, that's correctly done. Yeah. So by and large, it's still, to me, just because it's NFP, it's still basically a vol trade. This is a logical day trade, but what we're doing right now is really a vol trade, a volatility scalp, and it doesn't have to work that logically. That's why I'm like, this might be correct in a normal sense, but post non-farm payrolls isn't normal. So you can get lower lows and lower highs, and then Monday or Tuesday we go back to the normal trend. So it's not necessarily the right thing to do, but the logic is correct price action. So I will generally agree with it, but it doesn't have to work that way today. Are you guys enjoying this? Me going through charts? Is this a good learning experience, or am I just like treading water and wasting time? Do you like looking at what other people are doing? I mean, we're looking at other people's charts, and you're seeing how they think and how they do. Georgie's never seen price action in detail. Join investorbootcamp.com. I will teach you how to use price action. It's $88. I need your money so I can buy a Lamborghini. Please help me. I'm trying to get rich, $88 at a time. Of course, Canadians have dry humor, by the way. You might be 10 minutes into a conversation and then say, hey, wait, this guy's bullshitting me. Yeah, Canadians are funny that way. So anyways, yeah, we have dry humor. So, yeah, it's $88 and it's worth more than $1,000. It's probably more. People have told me that they've spent like thousands of dollars and got less than what I sell $88 for. So I actually want you to do this. I actually want you to learn. Cool. Maybe that's why I've been around 20 years, huh? Anyways, Selling pig dog. Okay. Selling pig dog. We sell 126.5, huh? So what? 8 hour, an 8 hour chart. Ooh la la. Okay. All right. Couple of things fundamentally. And of course, this is technical analysis, but things that are in the back of my mind. UK GDP is 0.2%, right? All right. Inflation is, what is it, 7? 6.8 or something? While this is happening, GDP is positive. The Bank of England is going to continue raising interest rates. In particular, if the United States is now being priced in as done because of NFP, then money is going to move from the United States to the Great British Pound. Now, I know the economic situation there sucks, but the rate of change, so we'll call it interest rate delta, is up. And this one would be flat, right? The United States might just leave interest rates where it is for a year and a half, while the Bank of England will keep raising. While the future expectation is higher interest rates by the Bank of England, money will flow that way. Okay, so I look at that, and that tells me, like, I expect this. So let me think about this. This is a sell trade, but what they're saying is down, and then buy it. Okay. So let me consider that. It's technically overbought. So we roll it over, and a little dipsy-do here or the other one. Okay, so the difference is timing. So a down week. I mean, how is the pound, how is this pair actually responding to NFP? I'm not even watching. I would assume up. So let's go, let me just take a sneak peek. Let me get back to this. Pig dollar, pig. And it's struggling, but let's go into a 4 hour. I would think up, and you can see I have it as up. So they're thinking down and then up. I mean, it could happen. What are they saying? 25? So they say, no, see, no. I'm going to disagree with that. So if it falls, we're not going to, well, I guess it's about the same. I have it going down to 24.5. They have it coming down to 25. I guess we're splitting hairs there. I just don't think so based on NFP. So I just don't, no. I just don't think so. So there's a lot about it I like. Oh, we've got a few more posts, huh? This is it. Gee whiz. I mean, I don't mind it. And I might be wrong and they might be right. So technically, yeah, it's overbought. It's made it lower. I'm going to agree with it. I think it's good analysis because I don't know the future any more than anybody else. So that's pretty good. By the way, you can be doing this yourself every day, getting a bird's eye view of what other people are doing, and you should vote. This is such a great way to learn. Try to figure out what they're thinking. Makes you ask yourself, well, what do I think? Okay? And remember, you don't know the future, but you can agree or disagree with the analysis. You don't have to agree with the opinion. Okay? But you should be doing this every day. This is better than a demo account. You can have a demo account and make 1,000 crappy trades in a row. You're not going to get better. You're not going to trade your way into improvement. It's a fallacy. This idea like the more trades that you make, the better you're going to get. No, you're not. But anyways, let's take a look. Peso. Oh, yeah, peso. Ooh, hang on. Let me double check what they're doing. Sell at 17.1. Yeah, it went higher than that, though, didn't it? Target 15, stop 17.5. I thought it even went there already. I haven't looked at it in a minute. I took a little loss on this earlier. But anyways, let's take a look. Down, up, sell. Down, up, sell. Down, up, sell. That one was a hard one. That's 19. I think I actually sold this one. Down to here, up to 18, right? Down, up, sell. Down. This one was tricky. I actually took this one and lost some money. And so now we have no lower low and a try again sell. Yes. I think I agree with this. The challenge before this was the possibility that it does that. But based on seasonality, I expect the US dollar to weaken. Based on the news that we just got today, I would expect it to weaken. Unemployment went up. Average hourly earnings went down. PCE wasn't worse. ADP was on target. I'm missing a couple of other things that we did this week. But yeah, like it's okay. I think we're on par for US dollar weakness. Okay, good. So generally speaking, I would agree with that. So I don't think it's perfect, but this is what we were trying today and yesterday, so that's fine. If you do it properly, there might be some work we need to do because it could make the higher high. You might have to have plan A and plan B, but generally speaking, I do agree with that. That seems fine. And this one already did. Okay, let's take a look at this. This trader is buying pound yen. Okay, I agree with that. All right, this one's tricky. All right, let's go into here. So I'm going to mark this up top, lower, high. All right, difficult. We had this bullish on the third week. So here's how I would do this. I would have a plan A, and I really hope that works. And this is my plan B down here. So it could, just for this trader to know, it could go to 85 and then down to 82 and then fight our way around. We might need a Bank of England meeting to push that up. We might need a Fed pause for that to happen. Like, it may not happen that way, is all I'm saying. Okay? We have this here, we have that there, and then this here. So there, I would count all of this as a support zone. So my support zone is kind of bigger. So it could make the lower low, higher high, and then like that. It's a lot of work to do it that way. This trade is okay, but I need a lot more detail than this. So it's the right price, but not the right time. Okay. I think on a smaller time frame, and this seems to be about a 4 hour. Okay, 4 hour. I think on a smaller time frame, I'm going to need I need this to come up, come down, and then maybe I'll buy it with the hopes of up and down, then up. So it's the right price, but not the right time. It's conflicting enough where I might have to disagree. The moving averages are bearish. The price action is not bullish. I don't disagree with it, but I would say not now. So I'm going to disagree. Okay, U.S. stock market's open. Let's take a break from this and let's flip over. Let's go to the ding, 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 ding. Let's see how the stock market reacts. Let's drop into a 15-minute chart, get a closer look, zoomy, zoomy, zoom. So we are at the conservative target for the day. So if you are part of the investor bootcamp community, and in particular a day trader, you know that this is today's buy zone. I don't even have a sell zone. And this is conservative target. This is aggressive target. We're right in there. So we're right zone to zone. So today is already done. We're already done today. Good job, everybody. Done. Okay, now what? So what do we do now? Now we plan next week. So now we go to the 4H. Okay, and here's what it tells me that could happen. Let's say we have a little more up, and then we probably have a bigger down, and then we have an up. So it could be like up today, down Monday, up Tuesday, Wednesday, Thursday. Yeah. Like, think of this. This is the projected low for the month of August, and we double bottomed. That was part of our projection. We knew that on the first day of August that this was likely the bottom of August. And so now, if we believe there's an up, check this out. Could we come back to this level? Yeah. Yep. Yep. So if, you know, there's that, of course, you could just have this like crazy out of position trade. We can be OOP this month, right? Out of position meaning you got to ride the 4-hour 21 forever, and it's going to hit target early in the month. Which poses a problem because normally I would counter trend this or be prepared for a counter trend. But remember, I think R3 might actually be the target. This could be one of those crazy months where that NFP just pushes us to 5,000. Like, this is it. This is what I was talking about in January. Okay. Cool, right? So we'll see if we can get a higher high. This will be a buy zone later today if you're a scalper. I mean, we can just put the scalper on. Let's put the scalping on. Watch it here. And so what I would do is connect these, right? Connect, 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 connect. Okay, there's the top. Connect all these bottoms. Connect, 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 connect. There's your bottom. And add a tertiary if you want. Okay. No, Dakar. I've been buying it for a little bit, but it's only my China stimulus play. Okay. Ooh, yeah. Yeah, see, good news is bad news. Bad news is good news. Anyways, welcome to the vol. People are adjusting their portfolios. Okay. Ooh, some profit taking. Oh, snap. This is why we do our analysis. Oops. I'm just going to mark these two, right? I'm going to connect that and that. All right. So there's our, and then I'm going to go to the Fiverr. Yeah. Cool. That means I'm giving back a bunch, huh? Yeah. I still have 800 pips. Okay, so here we go. Get ready. Notice this is on the open, right? So like lots of profit taking. Not today, Georgie. I don't like volatility. No, I like boring markets that I can scalp. I don't like volatility. Yeah, volatility is not good. So I'll scalp to pick. I mean, look, scalping should be low-hanging fruit, right? Should be easy pips. 25 here, 50 there. But the volatility makes everything complicated and risky. And you have slippage, and you have wider spreads. I'm like, this is not the right time to scalp, in my humble opinion. Okay. All right. So we'll see what happens here. Lots of profit taking on the open. We might have to wait. Okay. Might have to wait. My WTI still going. As going back to gold though, we're at a line. Let me zoom in. Okay, we're at a line. Okay, there's the roll reversal. Notice we went up, hit the daily target and stopped. So bulls, remember, think about it. They used the volatility to hit their target and they walked. Okay. So where's the future price? Well, let's go to custom. I have to zoom down. Zero lag moving average. Let's give it a fatty. No, let's make it a fatty. Come on, fatty. And 21. Yep, good. Okay. So what we're looking at here is this. Okay. And that'd be an interesting price for all that to work. But nonetheless, again, look at the power of this. That was set yesterday. $1,951. Not 50. It's not rounding. Okay. So yeah, so that could be an interesting price. This is an interesting price over there. How's Brent doing? Brent's having a good day. Looks like we're well beyond my target. Near says, yeah, slot machines. I don't understand the idea of a game of luck versus a game of skill. A game of skill is at least interesting and challenging, but yeah, I wouldn't be stimulated by pulling this lot. I guess I'm not dazzled by the randomness. I don't like randomness. I like control. So on this 30-minute chart, you would want to mark this at some point on Brent. But it's doing really well. So recently, at Investor Bootcamp, we went over the EIA report. We went over the OECD report. Looking at supply and trying to use this as demand. I also use OPEC. And another, like today we have the Baker's Hughes rig count. So that's later today. We're looking at Brent and WTI. Nat gas is up. Look at that. Bitcoin never turned bullish. Interesting. Well, $88, Georgie, is the recorded videos. You can upgrade your account and join a live group. Yes. Yeah, we can go back to the peso. Sure, Johnny. And yeah, I might try again. That's actually a good try again in there. Let me expand this and then drop into a smaller time frame. Let's go down to the 30, the dirty 30. Yeah, this kind of is interesting again. One of these things. And we're at the psych level. Yeah. 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 One more rally, and I might try it. Yeah, Georgie, like for 99 bucks a month, you can join the swing trading group when we meet Tuesdays and Thursdays. And our meetings are somewhere between 2 and 3 hours each. And there's lots of fundamentals and lots of technicals. There's group work. They're really cool. 99 bucks a month. That's pretty cheap. Yeah, so what do you think of that, Johnny? Like, we either do one of these things or we do one of these things. I'd prefer that. Yeah, set the limit. We could. I gave it a shot yesterday, I think, in this zone, but then this busted me out, right? Like, I don't want to be up there. So I think I was short here and out here. And so will I try it again? Yeah, I'll probably try it again because now NFP went my way, or what I think is my way. So, yeah, I'm into this. I love the Mexican peso. It's a great currency. So I can do this. I already have, let's see what I have on here. Oh, all right. So I'm going to do, now I don't know if this is actually right on this peso because of the, so this might actually be pretty narrow, but I could do something like this. Okay. And now I'm protected. I can get, right, a little short. Go back to the ends. See, ooh, nice, nice, nice. Nice little recovery. Oh my God. Although my Aussie hasn't recovered. Ugh. That's the problem because that's a bit of a kind of a bet on that one. Swissy recovering, Beast recovering. Yeah. And it looks like it did do the lower low, now lower high. Yeah. Yeah. Let's see. So it's still pretty early, but I might pick it up next week. I got time. I'm in no rush. Cool. So I'll let it work its way up and out. Aussie, yes, struggling in the short run, but I think I'll be able to survive that. CAD, remember I was long this earlier, but then with this volatility and me coaching live like this, I don't have time to manage my risk, so I'd just rather take a small loss. So it is now recovering. It doesn't change the fact I was facing risk. Japanese stock market coming down though, so that's not favorable for what we're doing. And again, I got out that for a small loss, so that's all right. So anyways, oh no, come on, Aussie, everyone else. Like we already looked, cryptos are dead, stock markets, let's go there. And we're waiting. Okay, DAX is coming down, S&P 500 holding. FTSE on a buy price. Okay, this is a buying price, and FTSE might be turning bullish here, in particular on a 4-hour. That might actually be a nice little trade where we next week's target is up here. Okay, so that might be nice. 7447 going for 7555. Okay. DAX getting hit hard, but this might be a buy zone. We'll see. All right in here. And that would predict a minimum of at least a double top right before a down. Who knows? But that could be interesting, although it's falling hard and fast. We'd have to check what's going on with them. ASX is in a caution zone, but bullish. So we're below the future 21, above the actual 21. I'm going to drag this across, and you can see all of it is a danger zone. But down, double bottom, up, down, and then with further stimulus out of China being announced over the weekend. Of course, we haven't had the weekend yet, but you wait. Wink, wink, nudge, nudge. My spider senses are tingling, and they say China's going to announce some stimulus package, and we're going to be up to probably that area next week. So that's what I would do if I was me, but there is a level of caution on this. Japanese stock market is in a take profit zone, but it's just weekly, so it's coming down now. So imagine, let's say we have a tough open to the week, cold open, and then we work our way back up. Look at that old plan. Worked out pretty good. Oops. And then right on time, third week of August, rally up. Perfect. Japanese stock market, British stock market, German stock market, S&P 500 we've done. So on a daily it looks fine. On an hourly it looks challenging. Okay, so like it's short-term short, but long-term long. Nice. So might be some buying to do later. So we've done that gold, we've done oil, we've done all the stock markets, we've done some crypto, we even did silver. I think we've done everything. I think we've done everything. And I've reviewed what? 24 trade plans? Cool. Cool. So anyways, I guess we're done, I guess is what I'm saying. So thank you to FX Street for hosting us. By the way, on Fridays, I'm in the premium room. I'm in the premium room every Friday at 10 a.m. Or is it 10:30? 10-ish. Last time I hung around for about 4 hours. So thank you for FX Street. And if you're a premium member, I see you every Friday. Would you check out Trader's Way? Consider them for your broker. Just, hey, open a demo account. You don't have to tell them I sent you. You don't have to use a link. I don't make commissions. Okay. I do run QuantBox. We did this in this morning where I went through all these tools. Very, very helpful if you're going to try to trade like an institutional investor, right? And if you're interested in learning how to be confident enough to let your winners run, not because you're good enough and smart enough and gosh darn it, people like you, not because of positive affirmations, but because you have real hardcore data. And then, of course, all my training and education is available at Investor Bootcamp. You want to see what one is like? Let's see if I can even log in. Yeah, check this out. So now we're inside Investor Bootcamp. I go to the training courses, and we can go to macroeconomic principles, or do you want oil trading? Let's do oil trading. Let's see, intro to the oil industry from 1850 to today, the geology of oil and gas, upstream, learn how to drill oil, unconventional oil, fracking and tar sands. Wait, you want to learn how to frack? Let's learn how to frack. Oh, it's an hour and a half long. And it's, interesting. And then you break it down with acid and you look at it, and you're like, oh, there's oil inside the rock. But how do you remove the rock from the oil? That was always the problem, especially when it's a bajillion miles below. Okay? And so that's what we're talking about. Think about it, that there's hydrocarbons that are liquid, and then there are hydrocarbons that are, we'll find the viscosity can change in the liquid from what you would think of oil to tar. We'll look at that. But what if it's even less liquid? What if it's actually caught in the stone? How do you get it out of that? And that's what we're talking about today. And in conventional drilling, we'll see if my mouse will work. Oops. Okay. In conventional drilling, if you had stone this way, okay, and you drilled, so let's say this is the surface of the earth. I'll have to change the color somehow. This is the surface of the earth. La 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 la. We'll put some grass on there. La 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 la. Okay. If you drill down and hit liquid, you can suck the liquid up, right? Or in this case, push it up and create pressure. Or it has enough pressure, it comes up. Well, if it's stone, how much stone do you get for your $8 million drill? You get this much stone. Is that enough oil to pay for your $8 million? Probably not, because we're literally talking, it's this big. You get this much stone. I mean, it wouldn't even pay for coffee that morning for the crew, right? So they just didn't do anything about it, but they knew this cool, rock, right? This than the drill, than the pipe going down pushing the drill. So the drill bit's wider, so the hole is wider, and inside that pipe we're pushing mud, which then comes out, cools the bit, but then grabs all the stuff at the bottom right where we're drilling, pressurizing, and then the extra mud goes up the sides of the empty space, pulling
it's very
all the material up with it. So it's somewhat solid. You understand? And an actual steel casing that's going to be there permanently. Then you pump concrete, wet cement. It's actually cement becomes concrete, right? So wet cement goes down there and then comes up the side because it's so pressurized. So it goes down the pipe and then up the side. Now the center of the pipe is empty. The sides are filled with wet cement, and then it turns to concrete, which is,
it's cool, right?
Liquid. The oil would come up and everything's good. Beneath the surface, you need to.
Look at this one video.
Cement we need.
You're going to learn how to frack.
It's
incredible
amazing.
detail.
I really do find it amazing. So we put in that steel, then we pump concrete down there, and now we have thousands and thousands and thousands of feet of steel reinforced by concrete to protect the well and Mother Nature, okay? And so you end up with something that looks like this. Way different. Now look at the size of do you remember how big these machines are? The rigs? They're skyscrapers. Look how tiny they are just as a reference of how deep they are, okay? And of course, when you get here, here's your kickoff point, right? Here's where you're totally horizontal. So then you pump all that concrete down there, and then the concrete goes through the pipe, right? And then around either side and then back up, and it's solid. Solid concrete all the way down there with steel in the middle. Very, very, very cool. See how it looks? It's beautiful, isn't it? Okay? And then what? You put the Christmas tree on. It's a wellhead. We haven't fracked yet. So that's when the drillers now leave.
Killer, right?
Remember, that's one crew, all the mostly water and sand. Now, I watched a lot of videos on the technique here. And if you're watching an environmentalist-based video, they will tell the button. It's not like everyone ducks. They got their hard hats on, like 3, 2, 1. Right? There's a guy pushing down on the lever, 300 feet, less than that. Stuff. So you have to add a lot of water.
Look at this.
This layer of hydrocarbons.
Now I'm taking you through tar sands like in Venezuela and Canada. Dude, this is one video out of 100 hours of training for $88. It's insane. So anyways, check out Investor Bootcamp. I'd be shocked if you thought it was worth less than $1,000. I think you might say, dude, I think just that one course was worth $1,000. Yeah, probably. I went to Harvard for 5 years. I paid a hell of a lot more than $88. So anyways, dude, yeah, it's truly unreal. You will become very knowledgeable in the oil industry, the entire 150-year history of oil up until the most recent technologies. So anyways, $88. And with that, I think I'm just going to go. I'm tired. It's been a long week. I got things to do. Oh, but there you go. So, yeah. PMI. Oh, thank you, Denise. Yeah. So I'll let you go and you can trade the volatility. And for everybody else, if you're in my day trading group, I will see you on Sunday night. And for everybody else, I will see you Monday. Monday mornings at 6:30 a.m., I do a quant box presentation. Is everybody watching my quant box presentation? They're released on YouTube for free. Yeah, here's yet another website. Sorry, I do a lot of stuff for you. YouTube.com/quantbox. Okay. Every morning, I give you an outlook for the day. Buddy, thank you. All of these assets are going to start moving over here. And that we know that from the seasonality. Add it into the commodities section. And do the scatter plot. A lot like what I did today. But anyways, these are free. They're released at 10. I do them at QuantBox at 6:30 in the morning, but you can have them every day for free. Oh, yeah, and I forgot. Thank you, Maida. It is a holiday. So, no, I'm not going to meet you on Sunday. No, I'm not going to meet you on Monday. Monday, no, I guess not at all. So I will see everybody Tuesday morning for QuantBox Live, and then Tuesday afternoon for the swing trading group. All that in, so QuantBox and Investor Bootcamp. So yeah, thank you about that, mate. I'm an entrepreneur. I always forget about Monday. So forget about it. No, I'm going to be released into the wild for a couple of days and see if I can survive. Hi, my name is Wayne. I'm your papa. I don't have a papa. He on vacation. So anyways, I want you to succeed. I hope I've motivated you to want more and expect more out of your trading abilities. I hope I've shown you different ways to look at things. I hope you have, a newfound, interest in fundamentals as well as technicals. So I try really hard to be inspirational, and I hope I have in some way a positive impact on your trading. So have a wonderful weekend. Thank you to our moderator for moderating better than any moderator's ever moderated before. In fact, there's nothing moderate about our moderator. Huh? Yeah. We have an exceptional, not a moderator, an exceptionalator. So anyways, thank you to everybody. Peace on earth. May the pips be with you. May our profits be above average.